Are real world assets the next big thing in cryptocurrency? Well, let's see what this person has to say about it. The cryptocurrency industry has evolved rapidly, growing from a niche interest into a significant global financial market force. Today, it encompasses a wide array of digital currencies, platforms, and technologies, all built on the foundation of blockchain technology. This growth has been marked by its fair share of volatility, regulatory challenges, and groundbreaking innovations, continuously shaping how individuals and institutions approach finance, investment, and asset management. Amidst this dynamic backdrop, the concept of real-world assets has emerged as a compelling new frontier in the crypto space. Real-world assets refer to tangible or intangible assets from the traditional financial world, from real estate and commodities to intellectual property and financial instruments that are tokenized and integrated into the blockchain. This helps to bridge the gap between the digital and physical worlds, combining cryptocurrency's innovative potential with the stability and familiarity of conventional assets. Actually, I would be surprised to see who can pull this off. What came to mind is somebody that I used to know that was trying to build something like this, that was trying to make a real-world asset for tokenizing the cities, and it seemed cool, but I think that person has a new job now. Advantages of tokenizing real-world assets. The tokenization of real-world assets introduces, not saying that he didn't have a real job before, that was a real job, he was a CEO, but I think it didn't work out, so he had to get another job to support himself. Real-world assets introduces several transformative advantages to traditional and cryptocurrency markets. First, by converting physical assets into digital tokens on the blockchain. Tokenization makes traditionally illiquid assets such as real estate, art, and certain commodities more accessible to a much wider range of investors. This democratization of investment opportunities allows individuals and small-scale investors to participate in markets that may have been out of reach due to high entry barriers or significant capital requirements. As a result, assets that could only be bought or sold in large, indivisible chunks can now be fractionally owned, enabling more people to invest in high-value assets with smaller amounts of capital. For example, the Cosmos Use Dex mantra enables the tokenization of real-world assets. It uses an automated market maker to automate liquidity provision to ensure stable market conditions for trading real-world assets. This is supported by mechanisms for liquidity provision or farming, which incentivize users to supply liquidity, enhancing market depth and trading conditions. Tokenization is facilitated through the Mantra token service integration, which converts real-world assets like art, commodities, or real estate into digital tokens. These tokens represent ownership and value of the underlying assets, enabling them to be traded similarly to cryptocurrencies on the platform. Cross-chain compatibility achieved through the platform's integration with the Cosmos ecosystem expands the accessibility and liquidity of tokenized assets by enabling their trade across different blockchain networks. This interoperability is crucial for broadening the market for tokenized real-world assets. Moreover, tokenization significantly increases the liquidity of these traditionally hard-to-sell assets. Liquidity refers to the ease with which an asset can be converted into cash without substantially affecting its price. Its traditional markets selling high-value assets like real estate or fine art can take time and effort, often months or even years, to find a buyer and complete the transaction. By breaking down these assets into smaller, more tradable units on a blockchain, okay, I'm just rambling on right now because I'm trying to figure out, what are they actually talking about? What is the point of real-world assets that is going to make them valuable enough for people to devote all their attention, or even a large portion of it, to getting the tokens that back this? Why is this important? Well, we know why it's important, because you could have the physical representation of whatever goods you have, but why should we care? This increased liquidity benefits sellers who can more easily convert their assets into cash and attract more buyers interested in these assets. Oh, there it is. Lastly, the tokenization of real-world assets offers cryptocurrency investors an exciting avenue for portfolio diversification. Traditionally, crypto investments have been limited to digital assets and currencies known for their volatility. Including real-world assets in a crypto portfolio introduces assets with risk and return profiles rooted in the physical world. This diversification can mitigate risk by spreading investments across a broader range of asset classes, combining the high reward potential of cryptocurrencies with the stability of real-world assets. Okay, this blend not only attracts traditional investors looking to dip their toes into the crypto world, but also provides seasoned crypto investors with a hedge against the volatility of digital currencies. Attracting traditional investors with real-world assets is starting to sound like Roth IRAs. Attracting traditional investors to the cryptocurrency market through the real-world assets leverages the inherent appeal of tangible asset investment opportunities that are familiar and understandable. The tokenization of real estate, art, and commodities bridges the innovative blockchain technology and the conventional investment landscape. This connection not only eases the transition for traditional investors into the crypto space, but also aligns with their investment philosophy, which often prioritizes assets with tangible value and predictable returns. Real-world assets offer a compelling solution to some common concerns that traditional investors have regarding cryptocurrency investments, such as market volatility, the complexity of digital assets, and security issues. The markets for real-world assets tend to be more stable and predictable compared to the high volatility in cryptocurrency markets. By tokenizing these assets, investors can gain exposure to the crypto sector while mitigating the risk of significant price swings. How? How can they mitigate the risk of price swings? If there's a market crash in the real world, wouldn't that affect the real-world assets? Actionable advice for investors interested in real-world assets. Investing in tokenized real-world assets begins with a foundational understanding of the cryptocurrency market and the specific asset class you are interested in. The first step for investors is to research and select a reputable platform or marketplace specializing in tokenized real-world assets. These platforms typically offer a range of assets from real estate to art and provide the necessary tools and information for making informed investment decisions. Creating an account, completing required know your customer procedures, and securing a digital wallet for storing tokens are essential preliminary steps. Investors should also remember to do their due diligence. This includes thoroughly examining the asset itself, its market potential, and the credibility of the issuing platform. Investigating the asset's valuation, historical performance, and prospects can provide insights into its investment potential. Additionally, a comprehensive market analysis can help investors understand the broader trends affecting the cryptocurrency sector and the specific real-world asset market, enabling more strategic investment decisions. Diversification between different asset classes and sectors can help manage these risks, reducing the impact of market fluctuations on the overall investment portfolio. Staying informed about regulatory developments and choosing platforms with robust security measures and transparent operations can mitigate legal and technological risks. The future outlook for real-world assets in the cryptocurrency sector is broadly optimistic. The appeal of bringing real-world assets onto the blockchain is driven by the desire for more accessible, liquid, and transparent markets. I will make my case on why real-world assets are a net positive. For those who try to get assets of any kind, real estate or anything like that, it would be such a huge plus if you bought something like a book bag, for example. You just bought a limited edition Supreme book bag. What if you forget it somewhere? What if you're on a plane or a train or somewhere and you drop it or it gets stolen or you forget it? Even if somebody were to take it, they could not claim it as theirs unless they have the real world assets to back it up. That right there would legitimately be a way to go to police and say, hey, I lost my bag. This is the bag. This is the tag for it. That person has my bag. I left it there. Well, how can we prove that that's really your bag and this person doesn't have the bag? Well, each bag comes with its own unique cryptographic hash numbers, right? What is it called? Where it's like alphanumeric numbers, like where it could be like A, H, like 1, 2. It can have like numbers and letters, but you know what I'm talking about. It'll come to me. But anyways, you can have alphanumerical, something like that. But anyways, like you can prove that this is yours. Or you want to buy real estate, for example. You want to buy real estate, and you're like, okay, well, is there a lien on this house? Does this person owe money on this house? What are the facts? Like, what are the facts that I can see all the information about this house in one place that's not behind a paywall, that's not behind a certificate? Because you know that you need like certain certificates in order to list houses and all that stuff. What if you could just go on a blockchain? Yo, what's this house address on the blockchain? Look it up. Then you have all the information of the house on that blockchain. Same thing with a car. You can find out if the car's been in an accident, all in one place. You can find out if the car has if the car's miles have been changed, when a car was bought. Okay, because you know people can go into dealerships and change the miles on cars, right? You know that, right? So that would be like a big game changer. So that's why I'm for real world assets. On the flip side of that, though, real world assets can just make things more complicated. It could be like really hard to keep track of things, to keep track of the assets, the addresses, to keep track of like which software and tools you gotta use, and you gotta spend more time on the internet. It's just like a lot, but it comes with benefits, and you know what? More transparency is always better. Because if it wasn't, we wouldn't have it. Because remember, all it is telling the truth. That's what we all want. We all want the truth.